Toyota. It's not a Japanese car anymore, 100%. I mean, it's
right.
Tennessee. Yeah.
A lot of it's American made.
Yeah, no, that's hopefully we can build up some more manufacturing, because really what we are right now is a service and consumer economy, and many say those are the stocks to hold through this election period. I had one interesting thing I wanted to throw out there about the Wall Street election poll that LPL put out. This is kind of interesting because they said there's certain industries, you guys will love this, will be affected by the election one way or another. If Democrats take over, Republicans take over. Who's elected president, who controls the Senate and the House. So they came back with Democrats. They favor healthcare facilities, obviously,
Of course. Sure.
food and staples, retailing, gas, utilities, healthcare services, life science tools and services, construction materials, home building, construction, and farm and machinery. Now, what's left? That's the Republican side.
Let's see, gambling casinos and
Offshore.
That's depressing already.
Well, it's kind of it's this counterintuitive balance between, what people support, and you get this ethanol, natural gas debate, and all those things. So when you get to the Republican side, it's cold and consumable fuels, drill baby drill, diversified financial services, banks too big to fail,
Sure.
oil and gas exploration and production, oil and gas drilling. I'd probably include fracking in that as well. But you can't actually buy fracking. You can buy companies that frack. Managed healthcare, electric utilities, specialty retailers, because if taxes don't go up, you can put your money somewhere, and that's with the larger base retail chains that have a high price point, and then telecommunications and services. So what people are starting to do is trying to define where they think the economy is going based on tax policy.
Well, I don't know that I believe that. I mean, why would retail favor the Democrats if retail is based on the economy and generally speaking, I think aren't Republican policies more pro-entrepreneurial, business growth, business development, business investment, hiring, all of those?
Well, that's a great point, because the real struggle right now is who's going to get the money. You always got to follow the money in the economy.
Right.
And what they're really saying, like President Barack Obama said this week, I'm not going to raise taxes on those earning under $250,000.
Woo!
So, but the idea is that those who are spending money at Walmart, Target, or other retail chains that have a lower price point are going to be okay, versus a high-end retailer like, we think Nordstrom's or Tiffany or others won't do quite as well. So
Tommy Bahama.
Nice clothes, by the way.
Love their shirts, but they're too expensive.
Exactly. So the idea here is that we really need to focus on not only the issue of who's going to be elected, Democrats or Republicans, but also the end result of this fiscal cliff, which is how we're going to pay all this debt service off. Because it's going to be a problem possibly in November. That could be really captivating. We could have the election and then have to go through that debate went through last August. And then almost all the tax cuts expire, and we talked about that this week. I mean, I talked to some clients and said, what if dividends are taxed at ordinary income? That's a big what if.
That's a possibility?
That is a possibility right now. I mean, if you go back to the Bush tax cuts, that's one of the things they lowered, which was a great thing in my opinion for especially older investors who want to clip coupons and get paid an income stream. But boom, here we are with this. This could be ordinary income, and then everyone's like, "What do we do? What's
it's like they've always talked about trying to overhaul the tax system, where they say, "Well, get rid of the income tax and just have a national sales tax." But the problem with that is that you have to make it high enough to make it worthwhile, and then you're going to scrunch. Quash, I guess is a better word. Consumption, yeah. Because people say, I can't afford that car. They're going to add an extra 10%.
And think of all the people that would suddenly be unemployed if you had no accountants to try to tax accountants.
That's true. We don't care about the IRS auditors, I know, but
here's
the other thing too. It's not a progressive
on the
thing,
defense side.
Right.
I mean, I guess in theory, what they could do is if you purchase, a higher priced. Anything over 50,000 gets a higher. Well,
they did that with boats and cars a few years ago. Remember that?
Yeah,
that's right. The luxury
tax, which was kind of brutal, but
it was brutal.
Yeah,
washed the industry.
It did, and VAT taxes, which they have over in Europe, are a great policy if your system are incorporated. But going from our system now into a VAT tax system could be really disruptive to many, many things.
Okay, guys, we're going to hit a quick commercial break here. Before we go to the first quick trivia question, guess what? We're going to have another special trivia contest.
Look at that, listen and win.
Week. Not this week, but next week.
Oh, next week? Okay.
Next week, yeah.
Right,
okay, we are going to go to our first commercial break. And remember, the theme is sports injuries. Here is the first trivia question. Who was the Oakland A's catcher that Pete Rose barreled over in an all-star game, separating his right shoulder? The first 3 callers with the correct answer win a free 3-day, 2-night stay at the Lighthouse Resort. Their website is lighthouse4fun.com. Call 888-912-1190. That's 888-912-1190 to answer this question. Who was the Oakland A's catcher that Pete Rose barreled over in an All-Star game, separating his right shoulder? 888-912-1190. Make sure to include your name, email address, and remember to speak slowly and spell out your email for us 1 letter at a time. And people are who's, not that's. So it's who was the person who Pete Rose barreled over. All right, 888-912-1190. We'll be right back.
Who dat?
I know, actually, I know that.
It's Fosse.
Ray Fosse.
Wow.
Very good.
Fosse, oh.
I think I was take the Democrats. It says here, you take the Democrats and divide it by the Republican companies. What the market's telling you right now is Barack Obama is starting to gain momentum. It's fallen off a little bit. This is from July 5th.
Welcome back to the Best of Investing. I'm Edward Brown, your host, along with Mark Hanf, Robert Schitt, and Lou Batmale.
The gang's all here?
The gang's all here. Hey. Okay, when we cut to the first commercial break, we asked this trivia question. Again, the theme is injuries in sports. Who was the Oakland A's catcher Pete Rose barreled over in the All-Star game, separating his right shoulder? And a little hint, that was 1970, I believe. Lou, you knew the answer.
I think it was Ray Fosse.
It is Ray Fosse. That is correct.
I think it was the first colorized All-Star game, if I'm not mistaken.
Oh, was it really?
I think, yeah, pretty close.
There's some useless trivia.
Yeah, totally.
Okay, Lou, you were going to get into some information that was interesting about LIBOR.
Well, the last couple of weeks we've been berated with lots of different information. The index is coming out, the Fed speak, and all those things. But 2 huge issues have really affected the market. The main thing being this LIBOR scandal that we're just starting to understand. And I know people here talk a lot about real estate, work in the mortgage industry, so everyone needs to chime in. But this is heresy as far as I'm concerned.
So what actually happened?
They've changed the spelling from LIBOR to LIEBOR.
LIBOR.
Well, I mean, these guys. I mean, as you guys know, the Fed sets the Fed funds rate.
Right.
And over there, LIBOR is set by the interbank rate, and they actually discuss about how much they were going to charge each other and trying to help each other's out. Each banker was calling each other. They have emails tracking back, like, what should we set it at this week? Especially during 2008, there's a lot of this going on because everyone was so nervous.
Lou, I'm sure it's all on the up and up. Come on.
They were just checking.
Just checking, yeah.
That's right.
Fact checking. So, I mean,
They call it price fixing? Anyway,
I think it's interest rate fixing,
yeah.
and in the end, there's so many things that are impacted by LIBOR. I think we know every single
Loans.
day.
Yeah, a lot of loans.
Credit cards. Everyone likes that rate because it's the most nimble of all the rates. It's not really set by anybody.
Wait a minute, so if I have a loan that's based on LIBOR, do I have any recourse to anybody on anything? I wonder.
We don't know yet. We're researching.
I mean, I know.
Well, Lou, you
I
said
don't think
everyone.
so, although I saw in the news this morning the mayor of Baltimore is
Right.
going to file a lawsuit because she said they had money in accounts and the interest rate was based on the LIBOR, and she figured if it wasn't fixed, they would have earned more money.
Right.
And Baltimore.
Well, okay, then as a borrower, I don't want to hear that answer. I don't
So-
want them to come back to me and go, you owe more
Oh,
money. because the LIBOR should have been higher.
your contract is set, so your interest
Well,
rate is set.
So at LIBOR plus, but
Yeah, so Lou, question on when you mentioned that certain people like LIBOR. Now, is it the lenders that like LIBOR or borrowers that like
I think it's
LIBOR?
borrowers.
I think it's actually, well, it used to be borrowers, now it's lenders.
Oh,
Because when the
okay.
when the rates are going down, you want to be in LIBOR because that would move with the market, and if people were negative about the market, the rate would go down.
So LIBOR responds to the market much more instantaneously
Yeah.
than the one-year T-bill, or
Yes.
the T-bill.
Exactly. So the idea here is that, I mean, to your point, Robert, that everyone's really upset because they had interest-bearing accounts based on LIBOR, and they were keeping their rates artificially low. The agreement was, let's keep rates low to help ourselves.
Well, okay, that's where I know,
Yeah.
that's why the borrowers like LIBOR.
Right.
Maybe lenders like it because it reacts faster, but borrowers liked it because it was a lower rate.
It used to be lower,
Of course,
right?
if it's LIBOR plus
But-
18%, that ain't so good.
Yes,
It's gonna-
when things turn around, it goes up instantaneously as
Right.
opposed to the T-bill, which is lagging, so.
Yeah, and then the other thing that I want to touch on real quick is that we do some work with them is JP Morgan. I mean, this trading issue is huge. I mean, we don't know exactly how big the London whale is. We just know that JP Morgan came out this week and reported earnings and said, well, the $2 billion doesn't affect our balance sheet that significantly. I think their stock was up on Friday about $2, if you can imagine, even after reporting the loss. People say it could be much higher. It could be maybe 4, 6. I think Bloomberg said today $7.5 billion. Who won? You remember these transactions, these derivative transactions are based on two parties going against each other. You know, they called it like the Big Short in the book and all those things. Hedge funds were on the other side of this transaction, and they made it out like bandits. They basically took this money from J.P. Morgan like it was a layup. So
it was a good analogy.
So if the hedge funds would have gotten slaughtered, J.P. Morgan would have made a lot of money.
Correct. And I mean, it's hard for people to rationalize that. I mean, you know, we talked about this off the air a bit. What's going on when J.P. Morgan can play like a sports team? If a sports team can win and lose and have a significant impact, why is a bank doing that? That's our money. That's investors' money. They're supposed to lend it out. You know, like what's it? A Wonderful Life, right? That's, you know, bring the money in, lend it out at a higher interest rate, and make your money. That's what banks are supposed to do. But now they're under such pressure to produce good returns. They go out there and they invest money in these risky derivative products that are, you know, bound with problems.
And it's not illegal to do it since the Glass-Steagall Act was eviscerated in the Clinton administration.
Didn't you see the remake of It's a Wonderful Life, though? Because Jimmy Stewart goes there and goes, "All right, Mr. Potter, come on, 7. Go roll the dice."
Man, what a week for news, you know. On top of all that, we had the Penn State report that was released yesterday. That's all the sports stations were talking about all day.
Can you imagine how much it's going to cost Penn State?
Well, if LIBOR is a problem, I mean, Penn State could be bankrupt. I mean, I
have no idea.
Yeah.
I wonder if they can take the statue down.
Did you hear about Nike? Nike took down. Joe Paterno is, had a statue up in front of a child care center.
Oh, I know. I heard about that.
And they took it down. So I heard that. I don't know if it was ESPN or someone said the other day. It was pretty scary stuff. But yeah, I mean, the financial risk that there's people locally in the Bay Area that made a lot of money suing companies like WorldCom and those other companies that had the Enron, the malfeasance that occurred back then. This is another, side of that. They go out there and make these problems, make these rules for themselves, and that's what's really frustrating for everyone. In the end, they go, "What's it going to cost us?" In the end, does it cost us $5 billion? So what? Pay the penalty. We made 10.
Well, you said their quarterly profits are huge, even taking into account the.
But that's like an Aaron Brockovich type thing, right? The utility companies go, okay, well, I know about 50,000 people are going to die, but we're going to, so we get sued for $100 million. We made $2 billion on it, so let them die.
So what you're saying, it's been a really good week for attorneys.
It's
always a good week for attorneys.
And what did Shakespeare say? Once you get in there, kill all the attorneys.
Nice.
There's a specific reason for that.
Wow. I can't believe I digressed that, but I mean, in the end, I'd still encourage everyone to, stick through the election period, stick through these dicey, returns we're seeing on like consumer price index, manufacturing indexes. Mm-hmm. Ignore all that stuff and just leave your money alone in the market for money you can afford to win or lose, and stay with it.
Well, actually, Lou, we've gotten an email that seems like it's more up your line than anybody else's, so let me ask that one.
Okay.
When we eventually go to break, when we come back, we'll ask the other emails we got.
Email time.
We'll get into real email time, but since we're on the subject anyway, email comes in and asks, I'm concerned about the stock market, but I would like to get income. Any suggestions? So I thought, okay, well, that's right up Lou's alley.
Right, no, that's a great question. I mean, the struggle right now is what type of income will I receive and how much will it fluctuate my original investment? If I put $10,000 in something and I'm getting a 7% income return, like you can with some oil and gas partnerships, that's great, but gas has fallen, or oil has fallen, gas has fallen over the last 6 weeks, 8 weeks. Can I stomach, I have some elderly clients, I've invested that money in oil and gas, I'm like, it's gonna go down, it's gonna go up, but you're gonna get your 7% rate of return regardless. So oil and gas is one. High dividend producing stocks, I mentioned the last segment. If we get through this tax loop, this tax situation where dividends are not taxed as ordinary income, they could be a nice place to be going forward. And some of these telecoms, oil and gas companies, not the explorers or drillers, but other companies are producing between a 3 and 5% dividend on their stocks. So I think there's plenty of opportunities. Plus, there are some bonds that pay a higher interest rate. I think everyone's leaning towards tax-free bonds right now, only for the main reason that tax policy won't affect them. They're very popular.
Do you like preferred stocks?
Preferred stocks are very good. You got to be careful. I mean, preferred stocks are like a bond and a stock, and you have to just be careful where you position them in a portfolio and how liquid they are, how much trading goes on. But they can be a nice income rate of return. And the idea is they don't appreciate. I mean, people buy those, it could appreciate as much as 7 or 10%. If it goes up that much, it can go down that much as well.
Yeah.
But I think right now, banks offer some pretty good preferred stocks. Even I'd like to see the auto companies come out with preferred stocks.
Okay.
Or more of them, I should say, because their balance sheets are turning around.
Now, for the listening audience who just heard all that great information, if they wanted to get a hold of you to ask more questions, how would they get a hold of you?
Who are you and where are you?
Lou Batmale, 415-256-8970. Again, 256-8970. Or you can always email a question to Louis, L-O-U-I-S, Batmale, B-A-T-M-A-L-E, @lpl.com.
Very good. Okay, we're going to cut to our second commercial break. When we come back, we've got a couple of emails for Mark and Robert that you're not going to want to miss, because I'm sure the listening audience, there are a lot of people out there who have the exact same question. So here is the second trivia question, and our theme is injuries in sports. In 1989, this Giants pitcher broke his arm while pitching due to cancer, which he eventually had to have his arm amputated. Who is he? The first three callers with the correct answer win a free 3-day, 2-night stay at the Lighthouse Resort. Their website is lighthouseforfun.com. Call 888-912-1190. That's 888-912-1190 to answer this question. In 1989, this Giants pitcher broke his arm while pitching due to cancer, which he eventually had to have his arm amputated. Who is he? Call 888-912-1190. Make sure to include your name, email address, and remember to speak slowly and spell out your email for us one letter at a time. And we will be right back.